Bias Trades here, and today we're going to be going over analyzing a system, what I look for to analyze a system, and just some key metrics I think you guys should pay attention to. My previous video was about what is a system, like how you kind of create one, so definitely check that out, and then this will be the next one. So some general info. Need to make sure your data is correct and accurate, e.g. all same entries for the same reason or the same setup, no overlapping. In the future, it is really good to find out what systems can be played at the same time to diverse your system portfolio pretty much, to make sure that when one is doing bad, the other one is doing good. So kind of like a negative correlation. That can be really useful. But when you're starting out, you just want to make sure that your data is just for one setup. There's no other entries in it or exits in it. It is simply for the same reasoning for that setup. Next, you need a way of including commissions into your backtesting. So either this could be through a percent method. So you could set like a 5% of your share size will be your commission or something, or just a flat rate. So if you want to just go the basic route of just putting an average commission price for every trade, then you could do that as well. Not as accurate, but still works. Next, I would recommend a couple of months of data to 2 years or above 100 to 200 samples. So if you are in need of data, check out my website below, unbiasedtrading.info, and you'll be able to find out how you could pull data using me and my codes. But if you already have your data, then yeah, I definitely recommend a couple of months to 2 years. This is an important note that 2020 and 2021 are statistically kind of outliers, so you may want to use years before, or just keep that in mind that it could be not a very representative view of your system because those aren't average years. So the win-loss or average gain conversation is one I wanted to talk about today, which I believe win-loss and average gain are both important, but both have good arguments whether you should be focusing on one or the other. A higher win percentage will mean a lower amount of losers and a significantly lower chance of consecutive losers, e.g. 70% win rate equals a 1% chance of 8 losses in a row. A higher average gain or a higher R amount means you will lose more, but you'll be able to take more losses, and one will recoup more losses compared to a lower R amount per win. Both are totally viable options and can be profitable, but you can see how that will change your equity curve. Personally, for me, I try to go the higher R amount, but I prefer a higher win rate. It just matches me better. Some people are better at just dealing with lots of losses, and then you have one really nice big win. It's either one, both works. They can be both profitable, but you have to be aware of what your system is. So if your system is a higher win rate one, but you get low R, so if you lose one trade, you're kind of losing the previous trade's win, and you're not comfortable with that, then maybe a higher R amount is what you want to go for. So this is just an example of a high win rate versus a high R. So on the left, you have a high win rate. It was a 70% win rate with a 1.5 R. That's how the equity curve looked. On the right side is a 40% win rate, but a 3 R system. So you can see there is way more volatility on the right side, a lot steeper lows, but then you have very quick jumps up. There are some quick jumps up on the other one as well. This is just a simulation, so it doesn't mean that's exactly how your equity curve is going to look. But this is just an example to show how that kind of looks. Next is comparison. So you'll want to look at all the ratios for your system and then split them into groups. So some groups can be longs or shorts, lower market cap versus higher market cap, or you could go into floats or time of day, that kind of stuff. Then see what ones are lowering results and try cutting them and see how that impacts performance. Does it lower the trade count but higher win rate? Does it increase average gain or lower average loss? So these are just important factors you'll want to be thinking about and how you optimize your system. Keep in mind you don't want to overfit it. So if you're reducing your trade count by half just to squeeze out 2% more profit, then that isn't worth it. So keep common sense into it and make sure you're not overfitting it. Does trailing stops improve performance or make it worse? So this is for me, in futures, trailing stops is incredible what it can do to your system performance. It will really help most of the time, at least for my system. But in small caps, I've never seen a trailing stop really help. And I think that's because in small caps, there's a lot of, really quick volatile moves that do end up coming down. So if you're shorting a trailing stop, doesn't really make sense. But for futures, it really can when there's so many reversals in the day. So what I focus on, I focused on the Sharpie ratio. I put it in twice there, sorry. Divides returns by a measure of its volatility to assess risk adjusted performance. This is really important. So you want to keep in mind how volatile your system can be based off your data. And then a Sharpie ratio is a really nice way to see that. Anything above 1 is considered pretty good. So, that's something to look at. Drawdowns of different categories. So how I was saying before of comparison, I want to see, does longs have a higher drawdown compared to shorts or the other way around? And this is just important for me. So maybe I will lower my risk on longs compared to shorts, for example. Trade frequency. This is really important. Some people are fine not taking trades for ages, but you ideally want a consistent amount of trades, or you have multiple systems, so you're not sitting there for ages. Next is your distribution of losses and wins. So with your current tracked data, how many losses and wins would you have had consecutively, and how far are they away from each other? So it's just about setting expectations for when you trade your system. How long will it be until your next win or something on average? What is the biggest winner? So this is important. You want to make sure your data isn't skewed by just one huge win, and try taking that out, or try taking out the top 2 winners and see if it's still profitable. Next, you want to see if different timeframes improve performance. So this was something for futures that does kind of impact it. Different timeframes can really prove different results. Like a 10-minute can be very different to a 1-minute on futures. So yeah, if your kind of system uses candles, then timeframes could be a cool way of seeing how that changes performance. And yeah, that's it. Thank you for watching, and make sure to check out my previous video and unbiasedtrading.info.